Okay, let's start posting invoices for the month of June. Our first invoice is credit card. Again, we're familiar with the process, but practice makes it perfect. Let's go ahead and book this one. Alright, purchase from Food Traders. Make sure the date is correct. Again, we're going to post the date of when we paid it, not the date of the invoice, because we're doing still in the catch-up mode. Alright, we'll continue using invoice number as our memo box. What do we have here? We have meat products, bread products, cooking oil. Alright, that's our food purchases. We're good. So again, what's going on here? We're buying it using a credit card. So our debt, our liability is going up, and liabilities go up when we credit them. What else is happening here? Our expenses, right, go up as well because we're spending some money on food that we will prepare for our customers, and therefore our expenses go up. Again, our debits and credits are in balance. We know this is our debit right here, this is our credit. All right, we're good to go. Let's continue. Save and new. Next one is also paid by a credit card. All right. What do we have here? We have food containers, drink cups, so on and so forth. Those are our restaurant supplies. All right, we're good. Let's go ahead and again reflect it. We're buying it with a credit card, so our liabilities go up. Our liabilities go up when we credit them. What else is happening? Our expenses go up, right? Expenses go up when we debit them. All right, so again, we're good to go here. Next one was paid with a check, right? So we're going to go and write some checks. All right, make sure the number is correct. All right, what do we have here? All right, we have some cleaning supplies. All right, good to go. Again, let's make sure we're reflected here. What's going on now? We're using our bank account to pay for it. So what's happening with the bank account when we write a check? It goes down. Bank account is an asset. Assets are decreased when they're credited, therefore we have our credit. All right, expenses go up when we debit them. So 6,400 is debited, it goes up. Again, debits and credits are in balance. By now we know what's where, but let's again remind ourselves this is our debit, belongs to this account. This is our credit, belongs to this account. All right, next one was paid with a credit card. Alright, we're going to continue using invoice number in the memo. What's there? We have soda, we have juices, we have some iced tea. Those are our drink purchases. That's an expense account. So again, what's happening here? We're buying this one using our credit card. So our liability goes up. We owe some money to the credit card company. What else is happening now? Our expenses go up, right? Because we spending some money on drinks that we're going to sell, so our expenses went up, we debit them. Right, our debits and credits are in balance, so this transaction is good to go. We can go ahead and book this one. we have a check that we gotta write here. Again, make sure this button is unclicked. If you click it, I'll show you. Click it, it says to print. It's something that we do when we maintain books on an ongoing basis and we write checks. You know, we print them as we go. In this case, we probably wrote it by hand and now we're just posting it. Again, we'll cover live accounting down the road in future videos. Alright, what do we have here? We have utilities. By now we're kind of familiar with how to categorize them. Alright, so we're good to go here, right? Again, let's make sure we fully understand what's happening here. We are paying it with our check. When that check clears, our bank account will be reduced, the balance will be reduced, so it's credited. Alright, what else is happening? Our expenses go up, right? 63,100. How do we increase our expenses? We debit them, right? So again, we have our debits and credits. They're in balance. This is our debit. This is our credit, right? So we're good to go. We're going to save a new. All right, one more. This one is a bit more complex, right? Because this one impacts more than one expense account. So let's digest this one. All right, so what do we have? We have expenses on leasing, rent, insurance, registration, maintenance, and some advertisement and promotion, right? So let's go ahead and do that. So what do we have here? We have our rent, and it's only 1,000. We also have our insurance, 150. We have our registration fee. We have our maintenance. We have our advertising and promotion, right? We're paying for that wonderful painting, promo painting that they did on our food truck, and instead of paying for it all up front, we're paying it over time. So here we are, right? We have multiple expense accounts being debited, and we have our bank account being credited, right? So again, let's digest it. Let's make sure we break it down and we fully understand what's going on here. Alright, see the debits are now, see we have credits, we need to get to the point where they're in balance right here. So we set our credit, we have only one, right? We know that much because our bank account is reduced, the balance is reduced there. So now we got to figure out what is that we're debiting, right? Well, we kind of did, now we're just reflecting it. Alright. And voila, right? Our debits and credits are in balance. That means this entry is good to go, right? We have one credit entry and we have 5 debit entries. Again, the number of credit entries and debit entries in any single accounting bookkeeping transaction is irrelevant. What's important is this, right? Your debits, the sum of your debits and the sum of your credits have to be equal to each other. And that's what we got here. So we're good to go. We're going to save and close it. Check reminder. Never run out of checks, right? God bless QuickBooks. They're very user-friendly. They remind us, right? So, well, we don't need to do that right now. Okay, so we're good with booking invoices that we paid. Now we're going to move and book credit card receipts. All right, our first one is for our gas station. In this case, again, we're entering the, we're entering the date on the receipt because it's a confirmation of transaction that took place, right? All right, that's our fuel. Okay, again, what's going on here? We are purchasing fuel and we're not paying for it with cash, right? We're not writing a check, we're borrowing. Right, so our liability account goes up. Liability accounts are increased when they're credited, right? Debt and liabilities are increased when they're credited. What else is happening? Well, we're spending money on gasoline or on diesel fuel. So in this case, again, our fuel expenses are going up and they're debited, right? So that's what happened here. This is our transaction. Again, check the dates, all correct, amounts, all good, save and new. And let's go to the next one. All right, we have another gas station receipt. Okay. We know how to book it, but again, practice makes it perfect, right? When you book a full year for a company, you'll know your debits and credits, right? So again, what's happening here? We just did it, but again, go with me, you know it. Our liability goes up and our expense account goes up. So here we are. Debits and credits are in balance. That's what we need. This transaction is in balance, so we're good to go. Save and new. All right, now we have our cell phone bill, right? We pay it every other month, right? It covers 2 months at a time. So we're going to go ahead and book this one. All right. So again, we're going to use it in our memo boxes everywhere, our amount. That's our telephone expense that we're paying here. So again, what's happening here? Let's take a look. We're paying it with a credit card, right? So our liability goes up and liabilities go up when credited. Also our expenses, telephone expenses go up and when debited. Debits and credits are in balance. We're good to go. Oh, and we have a return, right? Remember we bought DeCre paint kits for 4th of July and we didn't use all of them. So we're going to return some of them. So again, remember when we do returns, we click this button right here and it will switch the windows right here. Right now, this window acts as a credit. We talked about it, right? Well, once we click it, it will become a debit. So let's take a look what happens here. All right, 615. So that was for advertising and promotion. So we're going to hit that account again. And now this becomes a credit because we're going to reduce our expense on advertising and promotion. Every time, we return something that we expensed, it's no longer an expense, right? We're going to get our funds back. And in return, we're going to reduce our expenses because we didn't use it, we returned it. So let's go take a look what's going on here. When we return it, right, our liability goes down because the merchant will refund us. So here it is, it's a debit right here. This window now acts as a debit after we click this button. What else is happening? Well, we just talked about it, but again, let's make sure we're fully on board with that. Our expenses are decreasing, right? We returned something that we previously expensed. We thought we'll use it, we didn't use it. So we're going to credit our expense account, thus reducing it, right? So our expenses for advertising and promotion will be lower after we complete this return, right? So again, save and new, we're good to go. Again, just to reiterate, this amount belongs to this account and it's now a debit. This amount belongs to this account and it's now a credit. And that switch happens when you click this button, right? When you book purchases, you click this button. All right, so we're good to go. Save and new. All right, and we have a payment, right? Because we pay our credit card bills. Maybe we don't pay it fully, but we pay as much as we can reasonably, right? We don't want those finance charges to go too high. So again, what's happening here? Are we making a payment? And that payment is coming out of our bank account. Again, you can see that, you know, there is a transfer button right here, right? And what we'll do is maybe we'll use it next time. But for now, we're going to stick to this. And again, the importance here is the debits and credits behind the interface, right? Even though it says expense here, it doesn't have to act as expense. It all depends on what account you put here, right? And right now we're going to pick our bank account. And what's important here is the way this interface acts. And what is this window right now? Well, we just covered it on the previous one. Let's reiterate, it's a credit, right? So what's going to happen is this amount will be credited from this account, thus reducing it, right? It will reduce our balance in the bank account. And again, as we previously talked about, this window now acts as a debit, and it belongs to this account, and it will reduce our liability. So again, let's make sure we capture that. All right, so here we are, right? This is good to go. It's in balance. We can go ahead and save and close this one. And that completes booking transactions for June.